Yesterday was Columbus Day, so it was a Federal Reserve holiday. Most banks were closed, so but the market actually traded. But I didn't cover it. Over the weekend, we have very sad news of Israel was getting attacked by Hamas, a Palestinian group, and it's sad that now Israel is doing that retaliation. But it's a Middle East situation, so that might affect the oil. Now we'll take a look at the oil chart later. But yes, oil is set, and I hope they just restrain and hold back and resolve this peacefully. Okay, let's move on. As you can see, with the VIX volatility index, the S&P 500 volatility index, the VIX, have been spiking up above 200 days moving average. And yesterday, as the market opened, because of Middle East news, that definitely contributed to a volatility on the upside. Right now, its pre-market is compressed back down, so right now it's down 10%. Yesterday, the situation did not really affect the Western market as much. So the market was up slightly or so. So look at Spider. And now the interesting part is this is above the 200 days moving average now. So we're going back into more of the bull thesis. And it's rounding out. And Nasdaq definitely, right? You have a double bottom here. And you have a doji star Thor's hammer over here. And now it's spiking back up and approaching 50 days moving average, above the 21 days, above the 7 days moving average approaching. So you're seeing right here is a crossover, and the histogram, right, this bar is coming back into the green above the zero line. So that's giving me a better conviction to go for a bull trade. It's a bear trade. That's everything kind of like rounding back up. Now it's just a slightly bullish. It can go right back into bearish. Keep that in mind. Right? It's not up here like these. Right? Then you have a very bullish situation. Right? But again, this is a divergence, right? High, lower, low on peak. So that had a divergence. So we've seen a confirmation of a turnaround eventually. Right? Cross back over here. But then that momentum did not sustain and it came back down. Right? So it could be a continuous that it's going to stay in this area, right? Going between negative and positive. The red and the green, we're going to see that. We're going to see that. Right? So yeah, that's the QQQ, which is the strongest of the three indexes. And the small cap, that's pretty bearish. It really came off, of course, and the SOX is above, but the double bottom of the SOX, the semiconductor is actually weaker. As you see, the bottom, the second bottom, it's not really even the double bottom. It went through, and now it's coming back above this level, this breakdown level, right? While relative strength-wise, the QQQ, right, first bottom, second bottom. Now the bottom is coming off of this huge uprun from the beginning of the year. Right? First quarter we have this nice uptrend. Right? Now we are going to an ABC pattern. There's an A, this is a B, and a C. So that completed this whole run. Right? It might have a smaller EFG, whatever you can put it many ways you like, but the broad stroke of an uptrend, and then going to A, B, C in that sense. Now, does not mean it might not go down. They just give you kind of put it in perspective how things look like. So, and not much going on, right? Ever since the Silicon Valley drops, it just dead in the water, pretty much sideways in this area. It tried to pick up and then it came back down. Right? There's no fundamental drivers to really push it all the way back above the 200-day moving average. So it's in bad territory. It's being in bad territory. Financials The drop, it did recover mostly, and then it dropped back down. So as you can see, it's really chop chop, up down, up down, up down, right, like that. And this is the huge retracement. So yeah, it's just within an inside range of bigger volatility, chopping up and down like that. Energy did spike a little, as you can see. This is the energy index. So the oil gap and spike a little, but it doesn't really go like through the roof and go back to the high or anything. It's just a little elevated, relatively speaking. So you have this trend and then retrace, and then because of the mental reason of what's going on in the Middle East, you have this situation that it gap above back the blue line, which is the 50 bar or 50 days moving average in that sense. And that makes perfect sense. That makes perfect sense. For the mental reason, there's tension all going on over the weekend, start over the weekend in the Middle East. And everybody just, okay, that's pricing wise, that might affect what? That might affect the flow of oil out from Middle East in the area. Shipping, transportation, everything have more risk, so naturally that get reflected back in the price of the oil in that sense. And gold, that came back, round back up a little after this nice drop. Yeah, so it's a slight recovery, and of course you can see dollar staying above, staying buoyant right now in this. So and look at this. This is a end of the trend false hammer, right? In that sense. Try to sell it, but that's still buy here. I think it's that you're going to try to run the 150 mark, and then we'll see how it goes. But definitely, if there are more fundamental reasons, if the Middle East tension continues, U.S. already moving a strike carry group over there, and if that get involved with the bigger nations, then you're going to have flight to safe haven, where money moving away from risky instrument into the safe instrument, right? Like US dollar, gold, etc. In that sense, Bitcoin, get off trader stuff, right? So I just kind of take a look at it, just wondering, okay, yeah, it's one of those. Treasury is running up, right? It's recovering from the bottom, right? But if anything, it's going to come back down and test again. So yeah, if I'm going to buy any treasury instrument, that instrument, because high interest rate, there's nothing else to do, right? Capital, then I will wait for the next drop and see if there's fundamental reason start going in of the high yield. I've been watching high yield for a while, since the very high interest rate, and thinking the Federal Reserve is going to start tapering, not even start tapering, but they're going to hold off any further incremental increase into interest rate, but looks like they're going to prolong it a little longer. That's where it caused continuation of the drop, right? Excuse me. So not really seeing the bottom yet fundamentally. That's the thing. Let's go. Right, gold has a nice spike. Okay, let's go right. Oh, let's take a quick look at second world largest economy there. Large cap index, Shanghai index, that stuff. It's really kind of like a triple bottom right now. One, you have a false hammer and swipe back up. Two, but this is upside down false hammer. That could be signal of the end of a downtrend when it's continually depressed. Yeah, might be a good time to start thinking about, playing the eventual turnaround. Yeah, so, but that is still too early right now to really do anything. Okay, let's go to the play of the year. These are the play of the year of the Magnificent Seven. Apple. Apple is definitely recovering. Google, does it break a new high? It's right here now. Right here. So here's the thing. On relative strength, right? We see Apple depressed, not even recovering to the peak, not the second peak. I can see that iPhone is having a lot of issues with the new iPhone 15, and iPhone is it's kind of like into a old legacy now. It's not a new product or anything, so nothing really exciting. It's just the existing old users that the fandom of that. But at Google, a lot more promising on relative strength. Meta is getting there. So nice force hammer, nice force hammer, THOR. So you have 3 horse hammer and spike. So this is a good point to sell options, and then wait for the breakout. Or we can wait for the pullback and then sell the options. Yeah, wait for a pullback because chances are it's going to test punch here. You have the market follow market give us support to continue to move up, and then sellers going to come in and push it back down in that sense. So we have options. Whether the question becomes when to initiate the trade. Same thing here. Google is the one that might have a breakout. So Google break, and Meta will follow, and then go to the next level. Go test the resistance in that sense. That's what I'm envisioning. And Apple is the lagger because it's weaker. Tesla is kind of like Apple, so you need to break these level also. So let it break, pull back, and that is the play. And do one of those: break, pull back, and enter the trade if we see a false hammer on this. Yeah, so let's mark that, right? Let's find a nice good sign that will represent a potential play. What would be a good sign for a break up on the wedge and then pull back? What should become? Yeah, let's find something of that can remind me right off the bat. That's kind of a wavy thing. I like this guy, this one. That would do. This one. I'm looking for this now. Looking for this exact pattern. When it break, pull back, and then buy comes in. This is the pattern I'm looking on this, on Tesla. Right. And Apple will display have the same type of pattern. Looking hold on a second now. This we'll have to see. Not as clean yet. The technicals. This is definitely a breakout play. Although if we have this and the MACD moving average convergence divergence situation, higher high, lower peak. Yeah. So even on a breakout, we might even have. Right now, I'm gonna mark all these two breakout and pullback play first at this point. If it happens, so that will be as the higher probability play. That is the much safer play. I would tell you right now, is to go for that breakout and then pull back, and you see buyers come back in that sense, like this time. Yeah. But it depends if the macro environment changes. The world becomes safer place. The Feds say, okay, this is it. We're not going to really raise rate. We're foreseeing that the rate situation stabilized, inflation is stabilized and checked. And then a breakout without a macro factor behind it, I will play the outright on the breakout and buy on the breakout. So the rule is it breaks out, and then you got a confirmation on volume. Is the volume breakout first of all, and second, is it a momentum breakout? Is it clean? Does it have all the fundamental factors like the macro pictures behind it, right? And everything's rosy? So that is the important part too. So it's not just a breakout and buy right, but a breakout and then you wait for the next bar, and the next bar make a new high on the second bar. So the breakout, the end of the day, post breakout, the second day on the breakout. You look for these confirmations, and then you initiate a trade. And that's how the breakout. So you don't get a false breakout. You break out and then it pull back. Right? You wait for the bar, or you will wait until like 3:30 or so. The market about to close 3:45, and everything's still staying up, buoyant. There's no signs of really collapsing back. Right? Or 3:45, 3:50. Even 3:55, you really want to take the trade early. Right? Or ideally, you actually need to wait for the next day and then we make a new high from the previous day. That is when you initiate a true breakout trade in that sense. Of course, you have to be above 50-day moving average and all the other factors are present. Right now, the problem is the MACD. The MACD, that means this is a dying momentum while it's making new high, uptrend with a dying momentum. So that means slowly the seller are adding more pressure and more pressure to the buyers. And, yeah. Okay, Amazon. How will it pick itself up? Up there, yeah. This is just depressed on right at the 200 days moving average. Microsoft. Yeah, Microsoft, even break here this. Okay, so now that we look at these, and of course Nvidia, let's take a look at Nvidia. It's still a sideways drift up after that huge gap up. Oracle, sideways drift down after this huge gap. Okay, because of earnings situation right here, you can tell it gaps down. That's the danger of selling option. You might have to experience this, and then pull back and then pull back down. So you probably when it get like this, and pull back up, you want to find a place to get off and take a small losses. Otherwise, I'm going to do this, and yeah. So when it gap down, on the recovery, you want to get out and just take the losses, whatever, however small, instead of having to hold on to and experiencing a lower low. This eventually come back up and never get back up to here. Right? So that's from experience, I would tell you. If you're on the wrong side of trade, double top, somehow, somewhere, you initiate a 10, 12 delta trade down here, probably down here, and then it get right through your strike price. On that bar, and wait for a little recovery. You still have to take the losses of this chunk. Some losses, but not as bad as right now or even later on that many days. So this is a little from experience that if you're on the wrong side of trade, wait for the recovery. If it really gap a lot, wait for a little recovery, and then you want to get off on that on the first sign of on the first recovery. And if it continues to gap down, and then you have to determine, do you really take that big losses? Yeah, that's the hard part. Is if you have gap down and continue for a few days before it pulls back. So that's also your risk tolerance experience that comes in that sense. Okay, so we have the level 1 indicators. Let's go to the level 2. Let's go to the level 2. Level 2, I have a Heikin-Ashi bars on the Dogecoin channel in volume. Yeah. Do I have 2 volume here? No, I don't need that many volume. Why do I have so many volume? Interesting. Yeah. Why is it repeating itself unnecessarily? There we go. Average true range, that's what's missing, ATR. So I should put it back. We go. Dogecoin channel, average true range, volume. These are things that okay. This is a combination. Okay. Some news on Apple. We'll go over that later. So the Dow Jones. I can actually clearly tell me the Dow is still in a bear territory after this drop. Right, only 2 green bar. If I short the market, 2-3 consecutive green bar, I probably guarantee profit. In that sense, I use that actually when a counter trend form to a signal to get off a trade. Especially if I'm in the profit. Right? yeah, so we'll see how that goes today. Spider. Right, so the high can actually, except Nasdaq recover a little sooner. So Nasdaq is the stronger three, but it's still on the lower sector, the bear sector of the downtrend channel. You need to go above the medium line to be the bull. It just give me put it in perspective that is there more buyers or is there more sellers? Not necessarily to initiate trade. So yeah, trading is always an art and a science, and there's more art than science. Science give you need a repeatable process, scalable process, and use technical fundamentals, macro, all these three combined together. Using market data, and it's right in front of you. All these like the technicals, the fundamentals of the stocks. But the art is where is it really want to go? How do you gain a higher probability chance of winning or a good trade? Okay, let's go to right away Apple. Apple is nicely recovering, but I still not consider it as actually moved through back in the bull section of the downtrend channel, and the ATR is still high in that sense. Yeah, so ideally is actually ATR is low and then it turn right like right here it start compressing and then this turn and then go through. Now I can tell if you're long, you should have got out on the third bar in that sense. Yeah, so that is an exit signals in that sense. But on the downtrend channel, on top of the downtrend channel is the Heiken Ashi. Right? Clearly, you have more green up than red until this one. This is a huge momentum move. In actuality, this is where it hurts. This is where the difficult comes in. So, if you've been holding all these levels, right? Every time you make a level, the previous low is your final exit. Always remember that. The previous low is your final exit on any trade in trend falling. Right? That's very important. Right? This is the exit. When you break this, like break the middle, like that, get out and first and then think. You can always reopen the position. Maybe even here if you think, oh, that's just a sudden move, but it's not. Chances are it's not in that sense. But right now, the question always, do I open the trade? And the answer is no, not yet. Not yet. Not yet on Apple. How about Google? Google is having this nice trend. That's why I wanted to break and pull back. I see buyers again when we retest the breakout. And then I see buyers, a false hammer or a doji star. Then that will initiate a trade in that sense. Yeah, so let's mark that on this guy too. Let's go find that nice graph, that nice symbol right here. Right? That I want. I wish this one's green, but this will mark. I already have bullish bias, and now I'm waiting to give me a trade confirmation. Right? Yes, everything has to align. Everything have to. But you have to be patient. Yeah, trading have a lot to do with patience. Okay, so Google is a prime candidate to initiate trade. Meta is having its own day, and you need to go for this first. Go for this resistance. Yeah, I'm seeing these false hammer, yeah, but as we see, the trend is not as strong. I don't have consecutive a lot of green bar like this, right? A lot of green bar, right? And red, green, and there's a lot of, it's telling me that there's still a lot of pressure from the seller, even it's on the bullish side of the downtrend channel in that sense. Yeah, pause and think. That's very important. Pause and think and look at this. Right? So it's still it recovered most of it, but it come back down. So this is a little choppy in that sense. Yeah, still inside this range. I think is still early. Yeah, so Tesla and also have nothing. Microsoft, yeah, is not really an uptrend and then pull back yet. So the play is really more on Google. Google being up sideways. So is it going to do up sideways again? Maybe. That's what I'm looking for. Repeating of itself. I mean, every level buyers are coming in eventually. In that sense. And look at, oh my God, Neil just crapped out. Yeah, as usual. Yeah. Okay. So Lee is drifting off. Okay, expense kind of holding. So going back here, is it? Let's go to Lee. Take a quick look. I'm waiting for it to load. Yeah, definitely coming off quite a bit. Right below my eye, I have option out there. Cash secure put, and they're already drifting lower, but I still have time until October 20th for it to really. So it's going to fight around here and then just wait for eventually up move. Yeah, that's fine. This is okay. Eventually, I expect a little recovery from that. So yeah, that's the only one that potentially I might expect. This one, yeah, this one is, this one, popularly wise, I'm just gonna let it go to the close and let it strike above my strike price, and I'm going to pocket the premium. Lee is the one that's a little bit more concerned, right? So I might have to take small losses or get out when the next spike and just make flat on the trade and pocket all the premium in this timeline, this time frame. Yeah, so that's fine. Yeah, so it might be just like last month, gain a little or just flat on that. Okay, let's get back to the SAMU. Wait a minute, Intel. Let's see what's Intel. Yeah, Intel nothing. AMD right now it's 909. The market hasn't opened yet. Okay, yeah, TSM. SAMI, because of the chat GPT of the AI run earlier this year, these are the one in play, and I can see in the foreseeable future the AI related stock. These are the one to play. This is the rise of AI, where a lot of money, just like the internet bubble, rising in the bubbles, right? Pre-2000, we're going to see that. We're going to see within 3-5 years. I expect we're going to have a huge run, and then we're going to have a bubble, and that bubble will burst just like the internet bubble. Right now, compared to, I'm seeing this way like 96, 97, 99, 98, 99, right? And then where the internet stock is just going to go crazy. And so right now, compared to the internet era, we're going to have the rise of AI era, where this AI stock is just going to go crazy eventually. It's going to be a lot of money to make, and my focus right now is on this. In the foreseeable future, could be a few months, could be a year, couple years, could be 3-5 years. That is going to be a huge one in AI related stock and AI stock, just like the internet bubble back in the pre-2000, and create a huge bubble that bubble is going to burst. Yeah, so I'm going to play the up, run up, and I will play the collapse. And that's my plan for the next 3-5 years, if that's going to happen or within that time frame. And that is a huge wealth generation opportunities. Huge opportunities. I will tell you, that is another once in a lifetime. Like last time, 23 years ago, the internet bubble, right? How many 23 years we have? 25 years we have in our life. In that sense. And you have to be there and part of the players, you have to be in it to win it. You're too young, you miss the internet bubble run. You're too old, you retire, you're gonna miss this run. So this opportunities comes once every 20-25 years. And I'm gonna be there. I hope you're there. And it's huge wealth generation opportunity to build your wealth empire. In that sense. You missed it? And then you wait for the, I don't know what next one. But it's gonna be another 2.5 decades, 2 decades or so. The next great thing. Right now, the great thing, AI. And we see what ChatGPT does to the market. Here's the thing. Its potential, what it can do, what it actually done. Its potential, how it disrupt everybody, how it disrupt all the business model. That's what's important. Just like the internet. It will run ahead of the actual benefit. That's the stock market. It's about hopes and potential. By the time we actually distill down to something like Amazon, that's like 10-15 years later. It's better to catch that internet bubble run before and after, and then see the final rise of business model like Amazon and such, in that sense. You think about it, that's 20 years later, already. Huge wealth opportunity, and that is my focus going forward. And this is why it is so important to learn trend following. If you don't learn trend following, there's no way you can capture this huge profit opportunities where you're going to make huge multiplier, where you're going to expect 50 to 100% times return, 50 times 100 times, not 50%, 100%, 50 times to 100 times return. So every dollar I put it, I'm looking at $50 return to $100 on each dollar I put in. That's substantial. That's what I'm looking for in actuality. Yes, it's going to be risky well. Yes, timing could be wrong. So you have to be able to ride through volatility, ride through the losses to capture this huge big. That's trend following, remember. And that's the way, or hedge fund or investment is actually trend following. You will think about that. And if you don't believe in trend following, you want to play the reversal or the other game, you will never make as much as money as a trend follower. That's what I'm just saying. Not that you don't make money, but you will never ever make the huge multiplier like a trend follower. In that sense. Anyway, so right now I'm still waiting for the market to open. Not much going on yet. So for now, I'm gonna just wait until the market open. Wait for 10 minutes and see what's gonna done. And if there's anything anything materialize, then I'll reopen another video. But right now, I already lay out some of the plan ahead, like Google, and waiting for it to really break and pull back, in that sense. And then I will see the other weaker stock of the Magnificent Seven. Are there additional play? And that is dependent on the broader market and the macro picture too, in that sense, and the Fed and all that adds up, right? The macro, the fundamental, and the technicals. It's not just technical, it's not just a fundamental, not just macro. All of them combined and give you conviction to stay with a trade and to add to a trade. The key is you need to add. I need to add to position to when the trends start forming, in that sense. Okay, that's it for this morning right now, pre-market. We'll see how that goes later. Thanks for watching, and talk to everybody soon. Remember, prosperity happens never by accident.